All right. Today we got the CPI data and it was hotter than expected. And today is the perfect example to give you a price action lesson because there are people who believe that the market is moving based off of data releases like the CPI data. And with the hotter than expected CPI data, there are traders out there that are going to see that the CPI data is hot. They're then going to say that means the market must go lower. So by the time you get the data, the market did gap down on the data. So you can't trade that because it happens in a matter of seconds. And then by the time the market opens, you're extremely bearish because you think you're supposed to be trading on CPI data and not trading price on the chart. So you either try to short the market, which you get absolutely cooked because the market rallies off of that low all day long and never lets you out of that short position, or you panic sell your long positions because you think the hot CPI data means we have to go lower because, let's face it, that's what the echo chamber bears have been telling you going all the way back since 2023. So you freak out, you panic sell everything, and then you're faced with a dilemma near the close as we close near the high of the day and wonder if you should buy those positions back. So I will remind you one more time, price on the chart is the only thing that pays you, and we only trade what is on the chart. We could not care less about anybody's opinions. While we can be aware of data releases, we need to understand, we need to correlate that to the price on the chart, because sometimes the price on the chart does exactly the opposite of what you would think. And there's a lot of reasons why that is, mostly because everything is already priced in. If you heard about some news or you read an article or you know any amount of information, you have to remember the market has already priced all of that in, and smart money is the ones moving the market. We're talking about players that have billions and billions of dollars and not people that just have a few grand. And that's not to knock people that only have a few grand, but if you are a small trader, you have to move with the market and the price, and that is why I always tell you to move like water. And moving like water means that you are not forcing your will upon the chart, and you are trading these ranges, and you are being very flexible within these ranges. And I can show you this very clearly right here on TSE Trade Alerts. The public account, which trades every single alert I send out, made a brand new all-time high today. And I've been talking about this for a while about how we are absolutely crushing this market while we are in these trading ranges. And that is because I am sending these alerts out on how to trade exactly how I am teaching you how to trade, which is being very flexible and understanding you're getting in near support and out near resistance, and just continuing to trade this market and moving like water. So in the last 3 months here, you can see we are up over 13%. And I want to very quickly show you by comparison, if you were just holding the S&P 500 SPY ETF in that same time period, you are only up 0.81% in the last 3 months. This is why I personally like being a trader, because 3 months of absolutely going nowhere is frustrating. But as traders, we are sitting up 13% year to date and at brand new all-time highs. And to illustrate that, I can also show you here in the triple Qs is up 2.92% in the last 3 months. So a little bit better than SPY, but still in 3 months time, that is not nearly as good as what you could be doing if you were a great trader who is capitalizing on the volatility while we're in this range, up over 13% in the past 3 months. Now, also I can show you year to date, we are up over 7.3%. So we are absolutely blowing this market out of the water, and we are going to continue to crush this market simply by just being very patient and disciplined trader that know how to take the highest probability trade with the best risk reward setups. So if you want access to those trade alerts, that's my TSE Trade Alerts, which you can find out how to join in the description of this video. So now going back over to SPY, tomorrow we are going to have the PPI data, and you are going to be faced with the same exact dilemma that you just witnessed today. How are you going to interpret that data into a trade plan? And the answer is you are not. You are going to continue to follow price. So what you need to be looking for in the price tomorrow is whether or not SPY can hold this low down here at 599, and then we also have support at 597 and 594. And it does not matter if we come all the way back down to support. It is still possible to continue to find buyers and then continue to push higher. So your trade plan needs to understand, as we're going lower, you're looking to buy near support zones, and then as we're going higher, you're looking to scale out and take profits as we get closer and closer to the top of that range. And I still think there is a very good chance we are going to see that brand new all-time high, because as you can tell looking at the price action, we are getting in a wedge here. And anytime you're getting in a wedge, you are usually going to get a pretty large move out of that wedge. And with the bull trend, that does favor that large move will be to the upside, although it does not guarantee it. We have very clear risk levels at support that we can manage risk to. And as I always teach you to do when trading price action is put yourself in the direction of the trend to have the highest probability chance. and the direction of the trend is bullish, so the highest probability chance to win a trade is still going to be buying the dip at support. That is not the case in a bear trend, but we are in a bull trend, so you are wanting to focus on those higher probability trades, which are buying dips near support. So focus on these support zones that I gave you, knowing that if we break down below support, that is increasing the chance we're going to a bear trend. And then you do not want to just continue to blindly buy dips, because that's how you're going to try to catch a falling knife, and that falling knife on SPY would take us to at least 585. So focus on the price tomorrow. That's the number one thing I want you to learn from today's CPI data. Lots of bears got absolutely cooked today because they saw the hot CPI, shorted at the open, and then had no way out of their short position. So they either have to hold it overnight and pray that PPI data lets them out, or they're just going to continue to tack on more losses if we get the bull breakout and start going to a brand new all-time high. Be a patient and disciplined trader that moves like water and always manages risk and always gets in the best risk reward setups with the highest probability. On the NASDAQ 100 triple Qs, we had the same exact thing as SPY. However, the triple Qs are looking even more bullish, because while we did gap down after the CPI data, we had a very bullish candle that closed back above all of the moving averages, and all of these moving averages are still positively sloping. So there is a very good chance that after the PPI data, we just put in another higher low, which is also going to look like a potential double bottom off of 522. And then as we start to break above 533, you're going to get that double bottom breakout, which is easily going to take us to 538 and then 546. So the bulls have tons of reward to the upside, very little risk to the downside, because they have very clearly defined support levels, and those support levels are risk levels because we have a bull trend. And as I just said with SPY, the bull trend gives you the highest probability chance to make money going higher, which means you want to buy the dip near support. And that's where you're getting those good risk reward ratios with the highest probability. So anything is possible. Always have a plan to manage risk if we start breaking through support zones, and those are going to be at 522, 516, and 510. And if we break all of that support, then it is going to start looking a lot more bearish, and that means we could start looking for either short setups or sitting in cash waiting to see where the buyers eventually step in at. So as you can tell from the commentary that I'm giving you, we are following price. We have a plan no matter what happens, so we always have something based off price moving on the chart to give us actionable trading. And that means we simply just need to react to the chart and react to price, and we're not forcing our will upon the chart, which allows us to move like water with that maximum flexibility. And that is how we are going to continue to crush this market no matter what the market does. It could go higher or lower, it can just be a kangaroo and bounce around sideways. The point I'm trying to tell you is that we will continue to make money as traders no matter where the market goes, and that is the power of being a disciplined and profitable trader. So if you want to come trade with me, the best way to do that is TSC Trade Alerts, where you'll get the exact trades that I am taking for the percent allocations of the TQQQ or the SQQQ. And this is the TSC trading account right here, where you can see in the last 3 months, we are up over 13%, and year to date, we are already up 7.4%. So we are absolutely destroying this market. You can find out how to join TSC Trade Alerts by clicking on the link in the description of this video. So good luck tomorrow with the PPI data. Focus on everything that I just told you, and you will absolutely crush this market.